Hello everyone, welcome back to the channel. Now we have another important topic, mapping processes, entities and systems. And honestly, this is one of the areas where many audit functions struggle. Because modern organizations are highly interconnected. Today, process depends on systems. Systems connect to other systems, and operations often involve multiple departments and third parties. If internal audit does not understand these questions, important risks can easily be missed. So in today's video, we will discuss what process mapping means, why system mapping matters, how to map entities properly, and how this improves audit planning and risk assessment. So let's begin. Why mapping is important? Let's first understand the purpose. Why do internal auditors map processes, entities, and systems? Because organizations are very complex. It's simple. A single transaction may touch multiple departments, several systems, external vendors, and different approval levels. For example, a procurement transaction may involve procurement team, finance, warehouse, suppliers, SAP, approval workflows, and payment systems. You see, if auditors only look at one department, they may miss major risks. Mapping helps internal audit understand how operations really work, where dependencies exist, where risks concentrate, and where controls may fail. Without mapping, internal audit sees isolated pieces. With mapping, internal audit sees the full picture. So, what is process mapping? Let's start with process mapping. Process mapping means visually or structurally understanding how a process flows from beginning to end. Very simple. Internal auditors ask questions like, where does the process start? Who performs each step? Which approvals exist? Which systems are used? Where are manual activities? Where can errors happen? And where can fraud happen? For example, procure-to-pay process may look like this. First, purchase request, then approval, then purchase order, then goods received. After that, invoice matching, and finally, payment. Now, this may sound very simple, but inside each stage, systems, people, controls, and risks exist. That is why mapping is important. Why auditors must understand end-to-end processes. One of the biggest mistakes auditors make is focusing only on small pieces of a process. But risks usually appear at connection points. For example, poor segregation duties, weak approval flows, system integration failures, manual overrides, duplicate data entry. These risks often exist between departments, not inside a single department. That is why modern internal audit focuses on end-to-end processes understanding, not isolated activities. What are entities? Now, let's discuss entities. In audit universe terminology, entities usually mean auditable units or organizational structures. For example, subsidiaries are entities. Factories are entities. Regional offices are entities. Business units are entities. Imagine a global retail company. It may have local operations, international operations like, let's say, Germany operations, Saudi Arabia operations, etc. Each of these may become separate audit entities. Why? Because risks are different, controls are different, regulations are different, and operational maturity is also different. Sometimes one country operation is very strong, another may have major weaknesses. This is why entity mapping matters. Why entity mapping is important? Entity mapping helps internal audit understand organizational complexity, reporting structures, operational dependencies, and geographical risk. For example, some countries may have higher fraud risk, weaker regulations, unstable economies, or weak local controls. Without proper entity mapping, audit coverage becomes incomplete, especially in multinational organizations. So, what is system mapping? Now, let's discuss it. This is one of the most critical areas in modern auditing, because today, almost every business process depends on technology. System mapping means understanding which systems support which operations. For example, SAP supports finance and procurement. POS systems support retail stores. HR systems support payroll and employee management. Power BI supports reporting and analytics. Auditors must understand which systems are critical, which systems interact, and where failures can impact operations. Why system mapping is critical? Many operational risks today are actually contain system risks. For example, incorrect configurations, unauthorized access, weak interfaces, poor backup management, failed integrations, system downtime, cyber attacks. Too much. Imagine inventory data in one system does not match finance records in another system. This may create financial errors, stock inaccuracies, operational disruption, or even fraud opportunities. Without system mapping, internal audit may completely miss these risks. Understanding system integrations. This is another important point. Modern organizations rarely use only one system. Usually, many systems are connected together. For example, SAP may connect to warehouse systems. E-commerce systems may connect to payment gateways. HR systems may connect to payroll software. BI dashboards may pull data from multiple systems. These integrations create major dependencies. And where dependencies exist, risks also exist. For example, incorrect data transfer, duplicate transactions, missing transactions, synchronization delays. Internal auditors must understand these connections. Let's take a practical example. Imagine a retail company. Now, internal audit maps stores, warehouse operations, SAP systems, POS systems, e-commerce platforms, finance processes, and logistics vendors. During mapping, the auditors discover e-commerce inventory updates are delayed. Warehouse and store systems are not synchronized. Manual adjustments are heavily used. And one vendor has direct system access. Immediately, internal audit sees operational risks, fraud risks, and system dependency risks. This is the power of mapping. Without mapping, these connections may remain invisible. Now let's talk about common mapping techniques. Internal auditors commonly use process flowcharts, system diagrams, data flow diagrams, organizational charts, and workflow mapping. But honestly, the tool itself is less important than understanding the flow. Even a simple whiteboard discussion with management can create valuable insights. The goal is clear, not artistic diagrams. Now, let's talk about common mistakes. Mistake number 1. Only mapping departments. Processes usually move across departments. Internal audit must think cross-functional. Mistake number 2. ignoring system dependencies. Today, technology drives operations. Ignoring systems creates blind spots. Mistake number 3. Ignoring manual activities. Manual interventions often create fraud opportunities, control weaknesses, and operational errors. Mistake number 4. Creating overly complicated diagrams. If nobody understands the map you draw, it loses its value. Keep it practical. Mistake number 5. Never updating mappings. Processes and systems constantly change. Static documentation becomes outdated very quickly. How mapping improves audit planning? Now, let's discuss the final benefit. How does mapping improve internal audit? Very simple. It helps internal audit identify critical dependencies, understand operational complexity, detect concentration risks, prioritize audits, and identify hidden weaknesses. Good mapping creates better risk assessment, and better risk assessment creates better audit planning. Remember this, the goal of internal audit is not only reviewing controls. The goal is understanding how the organization truly operates. And mapping is one of the best ways to achieve that. So let's summarize today's discussion. Process mapping helps internal audit understand how activities flow from beginning to end. Entity mapping helps auditors understand organizational and geographic structures. System mapping helps auditors to understand technology and their dependencies and integrations. And all three together create better visibility, better risk understanding, and better audit planning. Thank you very much for watching. If you enjoyed this video, please like and subscribe. See you in the next video.